April 4th, 2019, Thursday. Guys, here's what's going on with the Market Moves Daily. The top three observations for the day are markets are close to a triple top. Number two, oil is showing weakness at the 200 moving level. And three, cloud stocks selling off hugely today. Guys, why are the best stocks in the market selling off? We're going to take a look at the charts and give you the answer. First, let's take a look at all the indexes and why we're actually saying that, hey, there could be a triple top formation right here. Guys, I think a blind man could see this one. Look at this. 1, 2, 3. We got three tops. Now, it does not mean that all of a sudden we're going to drop. Some of the tops, again, they take this sweet time to form, and they will drive you insane and crazy at days like this. Days like yesterday. Possibly we're going to have another crazy day today. It's just like there's just not enough sell volume yet. The markets don't want to go higher, but they don't want to sell, so they're like in the middle of nowhere right now. But each day they stay in the middle of nowhere, we're getting closer to the drop-off. So here's the triple top on S&P 500, and clearly we can actually go all the way to 2950 before the drop, but there's just no volume to get us there. As you can see right here from the chart, the volume has been dropping off. Now, things are still quite bullish for everybody there, but we're showing some definite signs of deterioration. Look at this. Dow Jones, one top, two top, three tops. We are right here forming this third top. And guys, for those of you taking the charts divergence course, look, you should spot this. This is very easily. Look, the first time we got to this level on the Dow, we had RSI all the way here. The second time we got there, the RSI was all the way here. And the third time we're getting there, look at the RSI. So the RSI keeps diminishing. This is a classic divergency between the price action in the markets and the RSI. Okay, so be careful. And this is what the market is working on. And it's sure going to fool a lot of people again. Everybody's going to think like we're heading to all-time highs and, you know, they're going to be cheery. And look, we may still have a slight move higher to sideways here, but ultimately, what is going to be the catalyst to be driving this market even higher? Things are nowhere as good as they were right here when we're getting to this top. So, guys, this is the time to not take any crazy action yet. But the exciting part is we're getting close to this area where there's going to be some really, really highly profitable days. So, triple top observed in the chart of NASDAQ as well. Now, let's take a look at the oil. Back in December, where everybody was afraid oil was just going to keep dropping lower, we said, hey, oil is going to move higher, and it's been moving higher for months. But finally, we're getting to this level, and it's still in a bearish trend. It's hard to believe because many of you will be like, well, it's been uptrending higher. But overall, if we take a look at multiple charts, okay, we had a death cross here. We still haven't gotten out of that death cross. I think oil is about to break below 62, and we're going to head lower. Now, you know what happened to the markets when the oil sold off in October and November, and the markets tanked. I'm not saying we're going to go for this type of situation, but a pullback to this blue line seems very reasonable, at least maybe back to this level 57, 58. Not today, but over the course of maybe the next week or two. So if oil all of a sudden showing weakness again, that's going to be one of the reasons it's going to be difficult for the market to rally higher because there could be surfacing some, demand side concerns for the oil market again, and we could see some headlines with that. So this is an interesting area to observe in oil because if we do break below, we just barely moved over this orange line, but if we do break below, I think this could be one of the indications that is telling us, hold on, this is what's about to happen to the market as well. It's about to reverse. So here's the main observation from today, guys. Salesforce sold off like crazy. I mean, look, at one point it was down like 10 points. From pretty much 165 all the way to 155. It didn't finish at the lows. It's trying to hold this blue line, but look at the triple top here. Guys, check this out. 1, 2, 3, beautiful. But most importantly, this is an unbelievable triple top formation because it is accompanied with these. Look, every time you see these larger size candles, it's accompanied by this huger size volume corresponding to these periodic sell-offs. And you see what's happening with the RSI, right? This time, I mean, it's guys, I like this chart a lot. I mean, this is very, very interesting that they're selling some of the best stocks in the market. Look at this one, Workday. Any similarities? Look, they all selling off on huge volume corresponding to these candles. So they all had a big day lower. And guys, this is something to be paying attention to because if they're selling the best technology stock, guess what? They're going to sell the rest of the technology stocks. Without the technology sector, the market's going to have very hard time moving higher. With oil dropping, the market's going to have very hard time moving higher. And here's another one, guys. 1, 2, 3. And there's plenty of other cloud stocks out there, guys, that if you pull up their chart, they're going to resemble this triple top formation. So the question of the day again, why are they selling the best stocks? Well, maybe because institutional investors are saying, hey, we've been moving higher in the market for 3-4 months. It's time to take some freaking gains, lock it in before the market drops. Now, I wish it was a clear indication that the market was going to drop today or tomorrow. I think we are ultimately going to get a pullback. We're going to talk about that in just a moment. Today was a move 7 in the market. Again, today, April 4th, 2019, move 7. Now, I know you're going to be thinking, whoa, hold on, I had it logged in as a move 12. And if we're to revisit, move 12 is actually when the market drops a little bit at the open, anywhere from like a few points to 15 points lower, and then it finishes at about the same level, meaning it still finishes in the negative territory. So the reason we locked this today as a move 7 was because the markets opened higher. Yes, they sold off, they caught the equilibrium, and they moved higher, and they finished higher. The market's, 3 points higher, something like this is where we ended up on the S&P 500. So we opened higher, finished higher, but in a way, if you wanted to draw, you can definitely draw a smiley face. So the way we have it logged in is a move 7 with clear behavioral characteristics of a move 12, which are both of these are bullish moves. So overall, the 2-day sequence is an 11-7, and this is how it looks on the chart, guys. This was the 11 yesterday. This is the move 7 today. Very interesting in that the market just doesn't want to drop below this 28.70, 28.72. So next day session, we're going to be observing this level. And if we break below that, guys, this is where we add in a ton of put positions, because if we break below this 28.70 on huge volume, we're heading significantly lower. The question is, we could easily move higher first before the drop-off. So timing the stop is difficult and frustrating at times. But that's why we don't recommend with trading with big positions. Not yet. There will be a time. So pay very close attention to the volume. Volume accelerates when we get to this 28.70, 28.72 level. If you see it in the 28.68, 28.69, 28.60 handle, basically on huge volume, this is the time to buy some puts or VIX calls, because all hell can break loose pretty quick there. And the 5-day sequence, 7, 5, 11, 7, indicating, again, a probability, increased probability of a move 2 or 3 tomorrow on Friday. So 5-day sequence, this is how it looks on the chart. Looks like the market after move 11, boom, it hit that low. Then try to hit that low again today, bounce. But the question is, how long can the bulls are going to be able to maintain this? Because all these moves higher, they happen on lower volume. Let's review the VIX. Steady above 13. Guys, the VIX could have easily dropped below 13 this week, but for whatever reason, it's not doing it, which is something to pay very close attention to. We no longer had the divergence by the end of the day. The VIX actually dropped slightly, but at one point in the day, did try to break out above 14. The observations going into the next trading session is, I think it's going to try to hit that 14 again, and the key thing to pay attention to, is it actually going to stay at that 14, or is it going to break above that? So if you see some digits on the VIX, 14.2, 14.3, 14.5, start buying calls on the VIX and start shorting the stock. So here are the key takeaways, guys. Triple top is in the making, but some of these tops, they could take some time. So don't jump all in. Don't go crazy. Trade small positions, but be aware that once we get the right sequence, this move lower could happen rather rapidly, as we have seen today with the cloud stocks. The cloud stocks could just be another indication pointing that the drop-off is near. Definitely keep your eye on the VIX. Falling oil prices. See if oil is actually going to make a move below that 200-day, and it could break quite a bit lower from there. Pay attention on the cloud stocks, because yes, we had a huge sell-off in the cloud stocks today, but will that sell-off continue into the following day and the day after? That would be a critical observation. So guys, you have a lot of things pointing that the drop-off is near, but how near, we're not 100% certain. All we can do is keep track of these market move sequences, and when the right sequence is going to be in place, we're going to be ready to roll and make a bunch of money. Guys, thanks for tuning in. I'll see you in the next video on Monday.